Hello there, Mavericks. This is Imri, and welcome to today's currency recap. It is Thursday, October 19th. As usual, today we will be doing a comprehensive review of the trading day. So we're going to be going over any meaningful news that's come out of the day, and I'm not going to bury the lead. There was a fair bit of news that came out today. We're going to be taking a look at the broader equity markets and commodity markets, as well as, of course, the currencies. We're going to do some technical analysis on the major indices, take a look at the currency baskets, and go over any major news coming out tomorrow. There isn't a lot, but we'll cover that shortly. And then we're going to wrap up by taking a look at some currency trading setups. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable Forex and crypto trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits generated. So if you're a technical trader with a technically based trading system, we want to meet you. So click the application link in the description below this video. Now let's break down today's market action. Starting off with some market analysis. So news of the day, comments by Federal Reserve Chairman Powell. Mr. Powell has left the door open for further rate hikes. In a nutshell, he said that inflation is still too high, and he's gone as far as to say that economic weakness is now needed to bring inflation down, which of course that needs to happen. And understandably, that has put a damper on today's trading. Initially, the reaction was positive, but then we saw some intense whipsawing, and ultimately equity markets ended the day down. It wasn't just equity markets that ended the day down. We're going to take a look at some currencies too, of course, but the total world stock index down as well. Commodities, however, holding up. Gold still rallying, oil up almost 2.5%, and crypto up 1.5% nearly. On the fiat currency side of things, the commodity currencies, funny enough, were the losers on the day. That's despite oil and gold being positive. So the loonie, the Australian dollar, and the Kiwi dollar all down on the day. The pound more or less flat. The big winners for the day, somewhat surprisingly, are the European currencies, the Swissy and the Euro. The yen more or less flat on the day, and the dollar more or less flat on the day as well. I don't think the numbers tell the whole story, however, so we're going to be taking a closer look at this stuff shortly. Over in the crypto world, it was Litecoin that led the way. Second place was Bitcoin, followed by Bitcoin Cash, and then Ethereum. So as far as the market outlook goes, it says -2 there, but it really should be a -3. We're below both moving averages, and the slope is negative. So apologize for that oversight, but the market outlook score should be a -3. However, as we take a look at this chart of the S&P 500, you can see that we are approaching 200 period moving average support. That's the blue moving average on the chart. And that also happens to line up with the bottom support line of this corrective channel. So there could be further downside, but ultimately I am still leaning towards the idea that this weakness is eventually going to be bought, and we will see a new high, eventually breaking above the 20 and 50 moving averages. Obviously that's not happening yet, but it is something that we will have to be keeping an eye on. In terms of news for the day, unemployment claims were lower than expected, and then we had Fed Chair Powell's comments. Tomorrow we've got retail sales coming out at 2 a.m. Eastern time out of the UK. So if you're in any British pound trades, just keep an eye on those before you go to sleep, assuming you're on the east or west coast here, because that the potential for volatility there with the pound certainly exists. I don't think, unless it's a huge miss in terms of the result relative to expectations, that there's going to be 5 or 6% moves. Certainly not, but it could be a market mover, and depending on the tightness of your stop, that's something you might want to take into consideration. Okay, moving on now into some currency analysis. On the velocity score side of things, again, I don't think these scores tell the full story. I think there's a lot of stuff in that zero column that could easily shift towards either the negative or positive ends of that spectrum fairly quickly. Euro and the Swissy, however, at a +2, and the Kiwi and the Loonie at a -2. So we'll be taking a look at those currencies for sure. All right, so moving now into some possible trades. So as we head over into TradingView, first we're going to take a look at the Japanese yen. So it is, I mean, after such a big downwards trend, you know, the price action is definitely languishing a little bit. We're not seeing the kind of swift upside acceleration that I've been calling for. That doesn't mean it's not going to happen, but I'm a little less immediately optimistic on the yen's outlooks. On the yen outlook. And the reason for that is the choppy nature of this price action. If this is indeed a series of ones and twos from, using Elliott wave terminology here, we should see some fierce upside acceleration starting tomorrow. So if downside risk in the markets accelerates, then yes, we could definitely see that scenario playing out. However, just keep an eye on this trend line and keep an eye on this key level. So if we break below the low from Wednesday, which is really not all that long ago, right? Just from yesterday, then I would consider the trend in the yen to still be down and this move up here to be a fake rally. So it's worth keeping an eye on this key level, the swing low from Wednesday. Very important level, so keep an eye on that. Okay, next up is the dollar. The dollar just won't quit. This is an impressive rally from the dollar. It has slowed down, since the beginning of October, but I don't see signs yet that we're due for an imminent reversal. Okay, so in terms of key levels to keep an eye on, I would say we want to keep an eye on this key level from Wednesday, similar to the yen, but that level is not as critical in the dollar as it is in the yen basket. The real critical level we have to keep an eye on in the dollar basket is the low from Tuesday, October 10th. So I would label this as key support. So we could take that level out, but I would expect buyers to come into the market, and this is critical support right here. So this level is absolutely inviolate. We have to keep a very close eye on that one. All right, so next up we have the Swiss franc. So the Swiss franc has defied all expectations, at least my expectations, and I've adjusted my Elliott wave labeling as a result. So I think we're still in the process of finishing off what is a multi-year rally that started in early 2021. And I think we're almost there. So I do see some Swiss franc strength ahead. I think we can now shift to buying it on pullbacks. I sat on the sideline throughout this rally, so if you captured that rally, congratulations. It was a great trade, particularly in currency pairs like Canada Swiss, for example, and we're going to take a look at Canada Swiss in a moment. How much higher can the Swissy go? Well, a common target is for wave 1 to be equal in length to wave 5. So in this case, if we take this move here, that's how far wave 1 went, and we overlay that on top from the end of wave 4, then we can see that we get a target that comes in the basket at 145.49. Now, as far as the data in this basket goes, that would be a new all-time high, the previous all-time high having come in August of 2023. So I like the idea of buying the Swissy on pullbacks, but I don't think that there's a whole lot of room to run this trade. Maybe one more leg. All right, so with the euro is a little bit different from the Swissy. It's possible, I'm a lot more bearish on the euro than I am on the Swiss franc, at least right now. It's possible we trade a little bit higher to tag the underside of this line, but I think it's more likely that we're going to roll over here and start trading lower. That's why I said the numbers don't really tell the story, although the full story, at least in my opinion. If the euro is, although the euro is up on the day and earned its +2 velocity rating, there's a couple things that make me a little bit nervous about this euro rally. So number one is that we're pinging off the upper end of this channel right here. I find that upper end of these channels very reliable when you pair it with a good Elliott wave count. I think there is a good corrective wave count here that labels this entire rally as a potential A, B, and C. So the other thing to watch out for, of course, is what happens if we do trade higher. Are there any key levels we can identify? Well, here's the tricky thing. I don't see a significant swing point unless we go all the way back to September, and that's quite a bit higher from here. So what I would say is we've gone up far enough that we're fairly overbought now in the euro. Let's see if we get a controlled pullback. If we get a controlled pullback lower that suits your trading plan, or if you want to rewatch our Maverick Currencies video on pullbacks, and you'll know what to look for. If we get a controlled pullback, that could present a buying opportunity. On the other hand, if we come crashing out the bottom end of this channel, then I'll look for a bear rally and then short the euro instead. So that's my game plan there. I said we would take a look at Canada Swissy, so let's take a look. All right, so yeah, if you caught this decline, great. Do I think there's more to go? Yeah, I do. I do think we will ultimately break this support. All right, how much lower are we going to go below the support? I don't really know. I can't really give you a very high confidence forecast. As you can see, we're in historic territory, right? So I would be very cautious playing the long side on the Swissy, especially you can see here on the daily RSI, we're almost oversold, and the bullish divergences are starting to show. Now, just because we have bullish divergences, just because we're oversold, doesn't mean the trend is over. So like I said, I do think we're going to break to new lows, but I think the risk is starting to skew to the downside as far as the Swiss franc is concerned. So a little bit higher to go, but I think we've got a lot lower to go in the grand scheme of things, if that makes sense. All right, next up is the pound. The pound has been somewhat behaving. So we pulled up into that resistance area, and I'm hoping we're slowly coming off now. The pound's been a bit of a boring trade recently, at least relative to the dollar, the US dollar. So I'm hoping we can break out of this chart pattern and then head lower. I'd like to see the pound trading back where it was in May. That would be a very nice turn lower in the pound. Okay, the loonie, also following the script. We got a textbook three-wave bounce. I'd like to see some downside acceleration now. And ultimately, I'd like to see us test this low from July. So I think we have a fair bit lower to go in the Canadian dollar. Aussie dollar's been a ride. I mean, I've been calling for downside. We did get that downside, but we shot back up, came down, shot back up. I'm now still expecting that downside to follow through, and I still think we're going to make new lows in the basket below the August 16th pivot. Finally, the Kiwi. So I said if we break below this level, I'm going to look for reasons to short the Kiwi. We got a little pullback in the basket. That was the opportunity. We're getting another pullback now, which could also represent another opportunity to go short the Kiwi. All right, traders, that's the currency analysis for now. So in conclusion, just as always, continue playing relative strength and weakness. Make sure that you're paying attention to proper position sizing. And of course, as always, follow your trading plan. You know, when I'm using language like look for a pullback, if you don't see the pullback or if the pullback doesn't suit the characteristics of your trading plan, that's okay. It's okay to pass on the opportunity and wait for something that does meet your criteria. All right, folks, thanks a lot for watching. Look forward to seeing you next week. Bye for now.